Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. What a good Friday morning it's looking like, given the fact that we had blowout the GDP figures coming in last evening, 8.4%, and that too vis-a-vis expectations of 6.5%. So, blowout quarter when it comes to the growth figures. We will be decoding the fine print with a guest on the show. And if you look at the setup for the market, looks like we are set for a gap up, given the fact that the GIFT Nifty is hinting at a start above that 22,200 mark. We are below that 22,000 mark right now. But, looks like we are set for a magnificent start to the March series, this morning, of course. Lots of stocks in focus. Hospital stocks saw a fair bit of drubbing yesterday. What is the outlook looking like going forward for, some of the stocks like Apollo Hospitals? We have Hindalco that has earned an upgrade. The stock has come off quite a bit, in the recent past. So we will be figuring out whether or not there could be more downside or is the worst over in terms of stock price. And of course, your stock related queries, keep them coming in on our live feed. We'll try and take them up with our technical expert on the show. So lots lined up over the next 30 to 35 minutes. Stay tuned. But before we move any further, let's take a look at the top headlines at this hour. Wall Street snaps three-day losing streak. Stocks rise after the Fed's preferred inflation gauge throws no surprises. Meanwhile, Asian markets are mixed, with the GIFT Nifty hinting at a positive start above that 22,200 mark for the Indian market. Blowout growth figures for the third quarter. India's Q3 GDP grows 8.4%, smashing expectations. In fact, government has revised the FY24 growth estimate higher to 7.6%. However, FY23 growth rate has been revised lower. And watch out for auto stocks, right, as monthly sales figures will be trickling in today. ONGC and Oil India will also be in focus as the government has hiked the windfall tax on crude oil. And, there has been a setback for Vedanta given the fact that Supreme Court has rejected its plea for the reopening of the copper smelter plant. So that has come as a setback for Vedanta. We'll see how really it reacts in trade today. But, looking at the other cues, yesterday we managed to end, just a little shy of that 22,000 mark. We saw a good recovery amid, extreme volatility in the last half hour of trade. So, we ended in the green near the high point of the day, but just a shade below that 22,000 mark. And if you look at the FNO cues, the Nifty open interest was up 11.1%. Rollover data looking at 79.3%. And when it comes to Nifty Bank Index, even the index came off days low and managed to end higher by 0.3% or thereabouts. But if you look at the open interest data here, up 6% and rollover at 74.2%. If you look at the stocks that are in FNO band, well, no stocks in FNO band today. Out of FNO band rather, will be Indus Tower as well as SAIL. Fund flows, DIIs turned into net sellers yesterday, but FIIs were net buyers to the tune of 3,568 crores in the cash segment. And if you look at the overall inflows in terms of FII flows, they had turned buyers, net buyers to the tune of 5,000 crore rupees. This after pulling out as much as 25,000 crore rupees in the month of January. But how is the setup really looking like? As we know, or as we can see on the screens with respect to GIFT Nifty, we are poised for a higher start. Let's get on board. Our technical expert for today joining me is Venkatraman of NeoTrader. Raja, great to have you on the show. Looks like we are set for a gap up open. We are in for a strong start to the March series as well. But, looking at the rollover data, which are the sectors, poised to outperform in the March series, and for today in particular, the levels on Nifty on the upside and Nifty Bank as well.
Sure. Good morning, Nandita. Thank you for inviting me to the show. So, like always, after a sharp drawdown, we are seeing that the markets are rebounding from lower levels. So every sharp drawdown right from the month of Jan, we are seeing that every time there is a sharp drawdown, people feel that yes, it is the end of the upside, and market quickly recovers from lower levels. So this clearly indicates that there is some buying happening at lower levels, in contrast to the expectations of even the bigwigs have now started saying that yes, probably we may expect a correction, we should expect a correction. So my caveat here is that as long as the market is not submitting to the correction scenario, one should refrain from thinking in that mindset, because if you drift into that mindset, then you will always be afraid to take any positions, and that's what is happening to many people now. Day before yesterday, market fell sharply, and many of us exited. And then now, when the markets recovered yesterday, people were not forthright, or people were not nimble enough to come forward. So now market is going to possibly open with a gap up, and if this gap up sustains, we could have a new high. Now, in this overall scenario, where are these people left with? These people are left with nothing. So my advice to all the viewers would be, yes, you should exercise caution, but you should not stay on the sidelines. Now, coming to the levels, Nifty has come into a nice trend line support here, and yesterday it rebounded quite well from those levels around 21,800. And I continue to believe 21,800, 21,700 are some important supports that one should watch out for at the lower levels. Now, when we talk about the higher levels,
Raja, hold that thought. I want to first get in and get an expert on the GDP print, and then I'll come to you once the market opens. Joining me is Mayank Jha right now, who's a senior economist at HDFC Bank. Just a few minutes to go into market open, so I want to quickly get in your thoughts. Thanks a lot for joining in this morning, Mayank. Of course, you've had a blowout quarterly growth figures of 8.4%, right? This was vis-a-vis expectations of 6.5%. Blowout figures, of course, but there's a sharp wedge between GVA and GDP data, right? What do you make of this sharp wedge? How are you reading into the numbers?
Yeah, exactly. So first of all, I mean, it is just a pleasant surprise, isn't it, that, our GDP numbers are so high. But as you rightly pointed out, the gap between the GVA and GDP is something that is basically, the meat there, that the whole GDP number is being pushed up by collection in net taxes, which is substantially higher. But having said that, there is a lot going on in terms of the deflator also. If you look at between, the difference between the nominal and the real growth. So even in agriculture, where we see that GVA has contracted, agriculture has contracted, I think, by 0.8% this quarter. But if you look at the numbers, nominal numbers, it is around 3.9 to 4%. It's clocking around that. So basically, a lot of agriculture sector has been hit by higher prices. In terms of nominal, so the cost has gone up, whereas for infrastructure and manufacturing and mining, the cost has come down. That is basically the play between the CPI and WPI, and as it has panned out now. But I think going forward, we shouldn't worry too much on the consumption front. Obviously, there are concerns around rural recovery, but overall, I think that as we expect that there will be rate cuts sometime soon this year. So that will, ease the, that will help the consumption demand. The other factor is on the farm input costs. So that, was very low in the current year. But going forward, we expect that will, the base effect will come in, and that the farm input cost will go up. So I think very good figure.
Right. Mayank, hold that thought. We've had, the market opening, right? Markets have opened in the green as expected. The Nifty is up triple digits. 22,100 is where we are at. In fact, even the Sensex up 350 points. So not a very big gap up. Nevertheless, a positive start. 0.5% uptick for both the indices, Sensex and Nifty. If you look at the mid-cap index, strength there as well. 0.7% kind of a gain coming in. The Bank Nifty also, of course, in the last hour of trade yesterday, we saw the Bank Nifty make a good comeback, and today as well it's building on that momentum. 0.7% kind of an uptick when it comes to the Nifty Bank Index. Let's take a look at some other sectors then and how they're doing in trade today. Autos will be in focus given the fact that auto sales figures will be trickling in. IT, yesterday this was one sector that was in the red along with the media pack, but today has made a decent recovery. 0.3% gains coming in. Auto pack extremely strong ahead of the auto sales figures. 1.2% kind of gains coming in on that index. Let's take a look at the metal index. 1.5% gain. So yesterday as well the metal index was showing a lot of strength, and today as well 1.5% kind of an uptick coming in there. Pharma not doing all that well, among the sectoral laggards today. But let's also take a look at the FMCG pack that saw some bit of buying interest yesterday after quite a few sessions. So FMCG is something that will come up on your screen next, and let's see how it's really doing. It is building on gains from yesterday. Nearly 0.5% uptick coming in there as well. Let's take a look at some of the gainers and losers then. Hindalco, top nifty gainer. There has been an upgrade, by a brokerage house. So reacting to that, Tata Steel, a close second. Look at BPCL, yesterday I think it was on the losing end, making a good recovery today, 2% uptick coming in there. UPL as well, upon nifty inclusion, that stock was under pressure. But today, it's up somewhere around, 2% or thereabouts. Hero Moto, Tata Motors, L&T, UPL, of course, UPL I have already mentioned. And looking at the losers, few and far between. Apollo Hospital continues to sulk. 2.5% cut coming in there after yesterday's 4% cut. Sun Pharma is the other one. As I mentioned, Pharma not doing all that well. So both the top losers on the Nifty are from the Pharma pack, Apollo Hospital and Sun Pharma. Nestle under some bit of profit booking after gaining yesterday. Infosys and Cipla are the other two losers. So just a handful of losers, 5 to 6. Aside of that, it is a pretty strong start, not a very big gap up, but a triple-digit up move coming in. So we've started the March series on a positive note. Mayank, thanks a lot for hanging on. Just want to get in your thoughts on the fact that we were expecting growth to slow down a bit after Q2, right? But of course, with Q3 performance also coming in above expectations, do you think we could see some bit of slowdown in Q4 now? The bulk of the slowdown that was being expected will come through in Q4. And what are your estimates for FY25?
Yeah, so if you will see the the slowdown in fact, if you look at the GVA figures, then that is a slowdown there. But overall, I think for Q4 there will be some slowdown mostly on the base. Do remember that the Q4 numbers for FY23 were one where we started beating expectations. That is where the trend started. And for FY25, our estimates, as we'll have to do the the forecast again, given the new numbers, but it should be between 6 and 6.5% is what we are assuming. And that will be, make no mistake, that will be a strong growth because the base is so high. So I think there'll be, in terms of forecast, I think even for the RBI, we might expect that, going forward, they would also, take into account this higher base. Overall, we expect the consumption to recover gradually through the year. Investments will remain strong. And among the sectors, I think expecting normal monsoon and, the welfare schemes that the government has extended and launched. And maybe there will be something like we'll have to watch out what is there in the July budget. So we expect rural consumption recovery as well.
All right, Mayank, with that, I'm afraid we are running out of time. Thanks a lot for taking out time and putting into perspective how things look for the economy going forward. Look forward to touching base.
Thank you so much for having me.
Thanks a lot.
Yeah, sure.
Well, let's go back to Raja, who's been waiting, by patiently. Raja, we've had a very strong, not a very strong, but a decent open, and March series has started on a good note. So for the day, how are you really positioned, and anything that's looking interesting to you for the day?
Yeah, good morning, Nandita. So, definitely the market has begun on a positive note. All of us were expecting that, yes, there would be a bump up. And yes, the bump up has been quite strong. And yes, global cues were benign, and we didn't have that much of trouble from the overseas cues. And now what has happened is the added incentive from the government has really pulled the entire market to the upside. So now, considering the next turn of events and how we have to position ourselves, I truly believe that the next few days are going to be very critical, as we definitely are going to recover, first of all, from a scenario where all of us were skeptical to once again reinstating our bullish belief. So yes, at the start of the day, the PSU banks looks to be quite promising. So I would definitely place my bets on PSU bank will be the first sector which I will track. The next will be metal, and then it will be the auto pack. Yes, like you rightly said, the auto numbers will definitely be in the limelight. So I would look for these three sectors to track for today's session.
All right, those are the sectors to watch out for in today's session. Hold that thought, Raja. We'll come back and take up viewer queries as well. But let me also bring on board Gaurang Shah of Geojit Financial Services joining in this morning. Great to have you on the show, Gaurang, as usual. But let me begin by asking you about the auto pack. I think among the top sectoral gainers today, ahead of the auto sales figures, right? But in terms of expectations, do you expect the PV, passenger vehicle end of the segment to drive sales figures this time around as well? Because tractors, of course, haven't seen a pickup. And CV sales have also been under pressure for the auto segment, right? So do you think this trend will continue? What are your own expectations?
Thank you, Nandita, for having me on the show. And it's always a pleasure to speak to you about the markets on your show. So let me say this, Nandita, that, month-on-month numbers should not change your view about your investments in the auto universe. I will highlight one stock on which we have a sell recommendation, and that is Escorts Kubota. Other than this company, we have virtually buy recommendation or hold recommendation on all other stocks. And our view, Nandita, is that given the government's policy towards the auto sector, given the opportunity that lies going ahead into the future, given the numerous launches that are lined up not only in the remainder of this calendar year 2024, but also going into the future, and the fact that from number 3 position, if the government wants to make India or Bharat number 1 in terms of automobile manufacturing capabilities and capacities, then I think there's going to be a plethora of opportunities for all those who are already established in India, whether domestic or foreign players, or new players who want to set up their shop in terms of manufacturing in India. So my sense is that auto is going to be in spotlight for a pretty long period of time. Input cost, semiconductor chip issues are now all history. In fact, very soon we'll have made in India chips hitting into the market thanks to the initiatives by the government. And pricing power is coming back. Additionally, safety features are going up. So we are optimistic on two-wheelers, three-wheelers, PVs, commercial vehicle, entire gamut. And our sense is that this sector is going to be performing pretty well on the earnings front as well.
Right. Another sector that has been in focus since yesterday is, hospital space, right? Supreme Court has, directed the government to look into why, there's been a discrepancy in the standard healthcare rates in public and private hospitals. Of course, we saw strong reaction from the likes of Apollo Hospital and Max Health. Today as well, Apollo Hospital, among top Nifty losers. But, how big a threat would this be for private hospitals going forward? Gaurang, want to get in your thoughts on this?
So healthcare has always been on the primary list for the government, and making healthcare affordable, especially for baseline and above that baseline population, is something that has been long desired. And it's fact, Nandita, that there is a huge difference in terms of the medicines, in terms of the medical services that are provided by private hospital and public hospitals. So this gap needs to come down to a great extent. And possibly the one name that you highlighted, Apollo Hospitals, not to forget, over the last 6 months, 1 year, this has been one of the most outperforming stocks in the healthcare universe. We have a positive coverage on Apollo Hospitals. Further downside cannot be ruled out given the run-up and the news flow that is there on Apollo Hospitals, but we still remain optimistic from a long-term point of view, along with Apollo Hospital, Fortis Healthcare, and Narayan Rudalaya. These are the 3 names in the healthcare or hospitals that we are optimistic. I think one needs to pay attention to humanity rather than the profit and loss balance sheet.
Right, of course, one needs to pay more attention to humanity, something rightly said. But Gaurang, also your thoughts on Vedanta. Of course, yesterday there was a setback. Supreme Court has rejected the company's plea to reopen its copper smelter, right? Of course, the company is taking steps to deleverage itself. There has been a restructuring as well. And the company has also said that they will be looking to pare debt by $3 billion by FY27, right? In the scheme of things, how big a negative is this for, Vedanta?
So this copper smelter down south, Nandita, did not have much value addition or contribution to the balance sheet if you actually go to see. And let me first give a disclosure. On Vedanta, we had a buy recommendation, but the recent highs that we've seen is where our targets were there. So we have now changed our buy to reduce or sell on Vedanta. Along with that, there is also a new news which is uh, possibly out in the public domain and the management has also spoken about is the split of different businesses or hiving of businesses and listing them as a separate entity. Possibly work in progress. You will see more steam gathering in the next 8 to 9 months. That's what the management has spoken about. But this particular news flow, as far as the copper smelter down south is concerned, I think it's going to be yes and no kind of effect on the stock price, depending upon which side the news flow is. But at current levels, if you ask me, I think use all rallies to either reduce or book profits on Vedanta. Wait for clarity as far as the demerger news is concerned.
All right, that's the view on Hindalco. But before, I want to first go to Raja again and talk about Hindalco. Raja, Hindalco is among the top Nifty gainers today. Of course, we have a CLSA upgrade coming in. CLSA has upgraded the stock to buy and has said that much of the sell-off may be behind when it comes to Hindalco, right? How are you viewing this on the charts? What is the kind of pattern that you're viewing on the charts now?
Yeah, when you consider the particular sector per se, the sector per se is positive, but the stock has not been, reacting to the positive vibes that are emerging in the sector. So what I would continue to believe is I would continue to have a wait and watch approach. Though the news flow seems to be encouraging, we really need to see how this particular counter is going to revive from low levels. Yes, we are having a positive start to the day. I need to see it sustain above 525. So that's still some way off right now. So I would continue to believe that yes, this stock is on good grounds, but it's a wait and watch for me.
All right, wait and watch when it comes to Hindalco. But Gaurang, of course, we know that the company has filed for IPO of its, US arm, Novelis, right? But, there are concerns about how it plans to use the funds raised by the IPO, because at the domestic level, they are not in need of any funds. So how it will really unlock value for shareholders, that has been one of the concerns for Hindalco. How are you viewing this development? What do you think the company will do with the funds that they are looking to raise? Do you think it will lead to significant value unlocking?
So we have coverage. Let me give you a list of ferrous, non-ferrous companies that we cover for the benefit of your viewers and investors, Nandita. Tata Steel, JSW Steel, Hindalco, Vedanta is on the sell side, and JSPL. These are the names in our fundamental coverage. Like I mentioned, Vedanta, we have a sell recommendation. On Hindalco, long-term targets are somewhere close to about 580 to 600 kind of levels. Novelis news flow can possibly act as a headwind and tailwind both, Nandita, at least in the short to medium term. But I guess funds, as and when it comes to the company, it's definitely going to be used to possibly, acquisition purpose or increasing the capacity and the kind of demand that is there for metals, both ferrous and non-ferrous. In domestic market, I'm talking about. Yes, Chinese news flows have an overhang on the entire metal universe, but our sense is that once we have clarity on the government post the general election, infra spending is going to pick up steam, and by the virtue of that, you are going to see uptake as far as consumption of both metals and cement is concerned. Not only because of the central government, state government spending, you have recovery in the real estate sector, and I think once the clarity on the government is done and dusted, we'll have the private companies spending on capex as well. So that's going to be, a tailwind positive for the metal universe. So we remain positive on Hindalco from a long-term point of view.
And what about Shriram Finance? Of course, it will be included in the Nifty 50 as well, right? So what are your thoughts on this, on the prospects of this particular stock?
Honestly, Nandita, I get pretty confused with the kind of talks that comes around. Let me say this very frankly. On Shriram, first of all, we have a fundamental coverage. That's a disclosure. Entry and exit of a particular stock, either it is from the large cap or mid cap, or either it is from the MSCI index, that leads to short-term, funds coming in and possibly, funds getting lightened up. Because depending upon entry exit, large investors have to readjust or rebalance their portfolios. So that may lead to, ones that are coming in, you will have buying coming in for that particular day or the next day. And for the ones that are going out or exiting, you will have selling pressure. Fundamentally, nothing changes as far as the company's capability in terms of manufacturing or services, whichever sector it is related to. Fundamentally, nothing changes because the work is, the work goes on as normal. So that does not create, entry exit does not create any fundamental overhang.
That's true, Gaurang. But the stock tends to react to this news flow. So we always tend to address news flow that tends to have some kind of reaction in the market as well. But with that, Gaurang, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. It's always a pleasure to get in your views on stocks that are buzzing and making news.
Thank you so much. All the best.
Well, with that, let's go back to Raja and address all the viewer queries that are trickling in this morning. Raja, the first query is coming in from Jia Mehta. She wants to know your thoughts on an Equitas Small Finance Bank and a Kotak Bank as well. And both the stocks, have been stuck in a downtrend. Yesterday, we saw some bit of, movement in Equitas Small Finance on the positive side. But Kotak Bank as well, has been a weakling when it comes to the private banking names. So on these two stocks, what should one really watch out for?
Yeah, when you talk about Equitas is currently holding it around 100 levels. Yes, the private banking space has not been really in the best of form. And when you take a look at Equitas, there is nothing much to offer at the moment. So if you're looking to be, if you're holding a position in Equitas Bank, then your stop loss should be placed below 98. And one should not look to average it at current levels because the kind of expectations which you are having in Bank Nifty, it is not manifesting mainly because of HDFC Bank. And now coming to Kotak Bank, the entire trend in this stock has been pretty miserable. And I'm using this word because despite all the kind of bullish triggers that are coming in, we are not seeing a positive reaction here. So yes, though the price seems to have hit some immediate supports at the moment, you could expect a rally from here, but that is not a signature to buy. So both are an avoid from my side. And if you're having a holding in Kotak Bank, your stop loss will be below 1670.
All right, keep a stop loss below 1670. That's the view on Kotak Mahindra Bank. And of course, you heard his views on the other stocks that you had a query on. But the next query is coming in on a Tata Power from Bhatt Yavar. He wants to know the long-term view on this stock. Power stocks have seen a very good rally over the last 6 months, if you see. But in the last 1 month, they have come under some bit of correction. Tata Power in particular has seen a 3% kind of negative returns over the last 1 month. But this comes after 50% jump, return jump in the last 6 months, right? So here on Tata Power, do you think this is just a corrective phase and one should look at buying or averaging at these levels?
Yeah, definitely. One should continue to look at this entire power segment with a positive outlook. All of us know that there is a SBI Energy Opportunities Fund, and they are especially going to focus on the oil and energy space. And with the kind of positive regulations that are coming into the power sector, and the cabinet also passing those resolutions. So I think that the power sector would look up. When you're investing into a power sector, one should remember that the movement will be slower, right? Though the market movement is quite fast, one should understand that this sector will move slow. But because of positive news flow coming into the space, one will expect some more upward drift. So one should continue to hold on to this. And right now is a good time also to buy into Tata Power because I believe that it has come and tested some important supports around 360 and it's now rebounding from there. So an upside is emerging here. So one can consider it as one of the candidates.
All right, that's about Tata Power. But the next query is on one stock that we talk a lot about and discuss almost every other week. It's Zomato. Raja, Shrikant Chavan wants to know your thoughts on this stock. Of course, it has been in an uptrend, and ever since it has reported its earnings, the stock has jumped almost 20% in the last 1 month. What is the next level you'll be watching out for here? 200 a possibility?
Yeah, very much because we have been speaking about Zomato from 120 levels. That was before the World Cup. And then every second or third interaction, we have the name coming up. And it has gone beyond even my expectations. My target was around 145, 150. It has now reached 160. So it clearly says that there is strong buying emerging here. And suddenly it has found a lot of interest even amongst the bigger players. So, and that is the reason why it is fueling up a very strong upside. And it has hit an immediate resistance around 172. So I would wait for it to cross those levels before I participate today. But then those who are holding can continue to hold on with a revised stop at 155, and upward towards 200 is definitely on the cards.
All right, that's the view on a Zomato. Hope that answers your query. The last couple of queries then, but I would club it because it's both the queries are from the banking space. Chinmay Salunke has a query on IDFC First Bank for the long term, and Rajesh Govind wants to know your thoughts on a Yes Bank. What would you be watching out for in terms of levels here?
Yeah, so as far as the overall banking space is concerned, the private banking space have really not been living up to the bullish momentum. So everyone is shocked as well as surprised. But then the fact of the matter is that there is hardly any momentum being seen here. So one should continue to expect a similar move until there is some movement seen in HDFC Bank. So basically, the overall banking, private banking is tied down by lack of movement shown in HDFC Bank, and that is one of the major grouse here. So be it IDFC First or be it Yes, everything is lying in the similar boat.
All right, a lot depends on when HDFC Bank really makes a turnaround. But very last query then, this one is coming in from Vignesh, and he wants to know whether Suzlon can retest levels of 60 to 65 in the near term. Of course, we've seen quite a bit of correction after a very good run over the last 6 months. But
Right.
40 to 45, I think that's where the stock is. 45 rupees is where it's at right now. But can we expect a 20 rupee jump here on in the near term?
The 20 rupee upside seems difficult, but then yes, this stock continues to attract good attention, similar to Yes Bank. So whenever a stock enters the two digit or even sub 50, it definitely attracts the attention of HNIs and retailers, because those who want to get a big alpha on their investment, they go in for this. And that is what has happened in all these names. And you can see here the likes of even R Par has happened to do well in this run. So you have to be careful that this upside is dependent on the overall market scenario as well. So keep booking profits. And if you are looking to invest into Suzlon, then this would be the right time. And immediate target which is emerging is around 50. So it has to cross the previous highs. And first of all, that if it is able to take out the 50 levels, only then the 60 is possible, because it is dependent on those levels, because at around 50 levels, there was a huge sell-off.
That's the view then on a Suzlon. But with that, we've come to the end of the query segment. But in terms of, stocks to watch, Raja, any particular stocks? You mentioned that, auto stocks, of course, should be in focus. Anything that you're liking in this space?
Yeah, the stocks which I would like to play for, one is Hero Moto. Hero Moto is definitely one of the good candidates which I found. After a sharp correction, the price found some good supports yesterday at lower levels, and after forming a positive setup, the stock has started reacting. It has already started moving up today, and I expect my targets to be in the region of around 4510 and 4540. And any dips, if any, towards the region of around 44.50 also to 60 also can be bought into, because the overall setup is quite good. It is coming out with decent auto numbers. So I believe that this will definitely propel the stock higher, and it could also be a multi-day play. The second stock which I would like to point out is Jindal Steel from the metal pack, which always in demand. The recent fall, every pullback in this stock attracts buying demand, and the stock has been making a higher lows, and it is coming out of its shadows of the last month, and I'm sure that it could be one of the stock to place for the month as well. So both of these stocks are my recommendation, and immediate target is towards 798 and 810.
All right, those are the recommendations coming in from Raja. With that, Raja, thanks a lot for joining us this morning and sharing your thoughts with us, and of course also addressing all our viewer queries as well as sharing your recommendations with us. Appreciate your joining in this morning.
Thank you. Bye.
Well, with that, we've come to the end of this edition of Opening Bell. From me and the entire team, thanks a lot for tuning in. But for you guys, don't forget to post your feedback in the comment section. And of course, don't forget to follow us on the links that are flashing at the bottom of the screen. With that, of course, stay tuned to Money Control for all your other news and updates. But it's a goodbye from me.